Okay, good evening, Mayor, members of council. It's good to be with you all today. First of all, thank you for having this special meeting. I think it's a special meeting. This year was a very difficult year to get these financial statements out. We had the adoption of statement number 87, deals with leases, and it's just taking a little bit longer to get these things finished this year. But the City of Covington made all the deadlines, so that's a good thing. Before we get into the handout that I gave you, I'm going to start in the financial statements. There's a thicker document that's got the seal on there. Mr. Bryant gave me a better picture to use this year, but I was pressed for time, so I just had to use something quickly, so that's why I used a seal this year. I'm going to start and talk about the reports that we issue as part of your financial statements, as I normally do. I'm on page 3 of the larger document again. I got to put some glasses on here because I can't see. Starting on page 2, you have our independent auditor's report. It's a clean, unmodified report, the highest level of assurance you can receive. No issues noted there. We do talk about, there's an emphasis of matter called a change in accounting principle. That's the adoption of GASB 87, Governmental Accounting Standards Pronouncement number 87, deals with leases. And this one is this one was very difficult to implement. There's a lot going on there. Prior to this pronouncement, you had something called capital leases and operating leases. Capital leases went on your books just like any other debt. You had this asset that you're going to have at the end of that lease, and you made debt service payments based on the lease agreement. Prior to this one, you also had operating leases. Well, operating leases weren't reflected in the financial statements. You're supposed to have disclosure in the notes, but you didn't have to book a liability on your books for these operating leases. And operating leases were just like you're paying for a truck or something, and at the end of that lease, the truck just goes back to the person that you were leasing it for. So they changed that. I think the issue is that a lot of local governments, probably across the country, were doing a lot of that operating leases. So these were kind of off the books financials that you really didn't see a lot of. So they put this in place so that we would have to show these numbers in the books. So what it entails is you can be a lessee where you're renting a car or a truck or something, or you can be a lessor where you're receiving money for renting something out. The city has a few leases that we had to put on the books. It required you to put a lease liability on the books, and it was offset by the right to use that asset. So if you're renting a car through Enterprise, you put the right to use that lease car on your books, and it is offset by the lease liability. It maybe sounds a little simpler than it is, but anyway, that was GASB 87 in a nutshell. Not a whole lot of fun there, but it's implemented now, and will be there for years to come. The second report that we issue is all the way in the back, page 150. This is the Yellow Book report, sometimes referred to as the Yellow Book report. It's the report on internal control and on compliance, performed in accordance with government auditing standards. In the past, we had that segregation of duties issue dealing with the Treasurer's Office. We felt like with the implementation of the software being fully implemented that we could get rid of that issue, or that finding. So we no longer have the finding related to segregation duties, but I did put a finding in there this year for bank reconciliations. And that's noted as 2022-1. If you look all the way in the back of the report, you can read what we're saying about the reconciliation of the bank accounts. Anybody have any questions about that finding? I know steps are being made currently to correct this issue. It's been an issue ever since you went to Munis. Munis is not an easy system to reconcile, and so it's just taking a little bit longer to get up to speed related to reconciling those bank accounts. But the most important internal control that a county, city, or town has is reconciling a bank account. You know, cash is king, as they say, and if you don't have cash, you can't pay people, you can't pay for accounts payable. You know, cash is your most important asset, so it's important that those bank accounts get reconciled monthly. The Treasurer's Office, there are some smaller bank accounts, and then there's a larger main bank account that is with the larger account that runs all the transactions through it. The smaller bank accounts are being reconciled just fine, so just wanted to mention that. Any questions about that finding? Over on page 152, excuse me, you have the Uniform Guidance Report. This is required when you expend funds, federal funds, in excess of $750,000. That includes the school board, so the city easily expends more than $750,000. So that requires a single audit. We call it a single audit. And it just requires us to do special audits for programs under the federal guidelines. Also in the back of the report is something called the Schedule of Expenditures of Federal Awards. We refer to it as a CFA. That's what this is talking about. You can look on that schedule and see what federal awards you receive. A lot of the money comes through the state. A lot of the school board money comes through the state. A lot of social services money comes through the state. But even though it passes through the state, it doesn't lose its federal category. So that's why we have to perform that single audit. Any questions about those three? I'm going to turn to the presentation, smaller document. And I'm just going to start on page 2. Page 2 is our letter to those charged with government. This is required at the end of the audit process. It's just a summary of the audit process. It talks about the adoption of GASB 87. It tells you what estimates we've included. It's just really just a summary. There's nothing negative reported in this report. One thing I will point out is the state made us aware, made the city aware of these opioid funds that the city will be receiving over the next 15 to 20 years. I forget how many years it is. It's at least 15 years. We received it on somewhere around December the 10th, pretty close to that. Deadline was December the 15th. So we made the determination that the amount of this receivable, which was $117,000, was immaterial to the city, so we did not book that. We've got any kind of uncorrected misstatement that we didn't correct the books for, we're required to let you all know that. Anyway, those opioid settlement funds will have to be used for specific expenditures. So my recommendation is just to put it in a separate fund, and that way you can keep up with it from year to year. And again, this is a receivable you're going to receive over the next 15 or so years. And the total is $117,000. I'm not sure what the first payment was for the city, but it might have been $4,000 and something.
Yes, and I think we've received like a total of approximately $17,000 or so.
Yeah.
The last one was in that neighborhood. They separated in a separate fund.
Correct. And it's, you know, those amounts really aren't material to the financial statements. I mean, if we see something that's not posted for $4,000 or $5,000, we don't correct it necessarily because it's trivial to the audit process. The only issue here was that over the course of that 15 years or so, you're going to receive $117,000. So we had to look at materiality levels at a higher level. Any questions about that report? All right, over on page 5, we have a few management comments as we've had in the past, similar to what we've had in the past. Management comments are items that we don't think rise to a level that we have to report them in the actual financial statements themselves. These are just recommendations to help with internal controls, really. If you have any, one of them deals with the bank reconciliations, which I've already talked about, property tax reconciliations, the urban highway maintenance. There's some testing we have to do related to that, and they're supposed to specify if they worked on Maple Street or one street or whatever they draw like. They're supposed to be specific as to where they're working in the streets, and sometimes they just use citywide, so we make a recommendation that they not use citywide when describing that. And then the school board had one conflict of interest form that wasn't filled out completely. If you have any questions about those comments as you read them, you're welcome to contact me. You have my email address, my phone number on the front of this document. So anytime you have a question, please just let me know. Looking at some of the numbers, if you will always like talking about this, and I haven't shown you all this in the past, but the insert that I gave you all, I put this together last night as I do it for other localities, and I thought it'd be neat to see what it looks like for the city of Covington. This, what I call equity analysis, shows that the books for the city are kept on two different bases of accounting. The top under the blue is a balance sheet, basically. It's called the statement of net position. It's Exhibit 1 in your financial statements. This is just a summary of that. It's a long-term perspective, full accrual numbers. It includes capital assets, long-term capital assets. It includes long-term debt, all your long-term debt. You can see from this, one thing I will mention is when you show 5-year trend information, sometimes the numbers get a little skewed. So back in 2018, the solid waste fund or the landfill fund was being reported as a primary government expenditures. The city has since changed that, and in 2019 it was moved on to a fund by itself. So the 2018 numbers are a little skewed because of that, the way it was accounted, the landfill was accounted for in that year. So in looking at 2022, if you look at net position, which is about a third of the way down the page, total net position for the governmental activities for the cities, $10.2 million. If you want to compare that, I would go back to 2019. 2019, you had $3.6 million in net position, unrestricted net, in total net position, excuse me. I'll also point out your unrestricted net position, which is the money, in layman's terms, money that you have for ongoing operations, was a negative $405,000. Today it's $6.5 million positive. So that's a swing of about $7 million over that 4-year period, which is a good thing. You report positive amounts for all three of those categories. Investment and capital assets are just your capital assets minus the debt it took to finance those assets. You have some restricted funds, which are grant funds, I think, mostly. And then, of course, unrestricted is the important piece there. Down below that, under the yellow heading, it says governmental funds. It's the balance sheet. This is a modified accrual basis of accounting. It's a short-term perspective. It doesn't include capital assets. It doesn't include long-term debt. Typically, when you look at a county or a city and you try to figure out how well they're doing or how poorly they're doing, you look at the modified accrual basis numbers. So if you look down at fund balance, which is almost at the bottom of the page there, fund balance, total fund balance for government funds was $11.3 million. 4 years ago, in 2019, it was about $5.5 million. So that number has been increased very well. We're typically asked how much of a reserve do you need? What's a good amount of reserve? We typically recommend somewhere between $15,000 and $20,000. I think I would want to be right now on the upper end of that, given the current economic state, where we might be headed in 2023. I don't have any. I don't have a crystal ball. Don't know where we're heading, but it doesn't sound like we're headed in a good place. But anyway, so to have more of a fund balance now would be better than having less of a fund balance.
You said 15–20%?
Yes, sir.
Okay.
Currently, your fund balance as a percentage of the city's expenditures and of the school board's combined, which is that $28.159 million, is about 40% total fund balance. Unassigned balance about 27%. Any questions about that? That number 4 years ago was half that number. So the financials have definitely improved over that 4-year period, 5-year period. All right, I'll move on from that. Go back to the bound document, number 7, page number 7. Just a few more schedules here, and I'll wrap it up. I don't want to keep you all too long. Over on page 7, you have a summary of the general fund for 5 fiscal years. The general fund is the main operating fund for the city. Another place that you want to look to see how well or how poorly the city is doing is the general fund. And like I mentioned earlier, 2018, you had the landfill was merged into the general fund, the solid waste fund, and also during that year you had some pretty large capital expenditures related to a bridge, and you had a lot of VDOT money. So when you look at these percentages over to the right, it's a little bit skewed. But you can look at a couple of good numbers to look at are the 2 top numbers there, your property taxes and other local taxes. Over that 5-year period, your property taxes have increased about 4.3%. Other local taxes have increased about 3.2%. Those are the main revenues that the city receives. Intergovernmental is state and federal. It fluctuates from year to year. You all have had CARES money last year. This year you have ARPA funds, although they haven't really been spent this year. Haven't been spent as of June 30. But you have a lot of grants that can make that intergovernmental or state and federal funds fluctuate from year to year. I'll come down to change in fund balance. That yellow line, change in fund balance was an increase of $2.6 million. Ended up with general fund balance of about 10.9. Cash in that fund's about $9.9 million. And when we just look at the general fund, calculating those same reserve numbers, you're at 40%, 36%. So it's similar to what we talked about over on the other schedule. Any questions about that? Are there any questions about that schedule? It's a lot of numbers on there. No? Okay. We've got some graphs in here, and again, our base number is 2018, so the numbers look a little skewed. In 2018, you had a lot of intergovernmental revenue, which is that green number, that's made it look like you had less property tax percentage than you really did. Over on the other page, page number 9, the landfill was included in 2018, and you had some large VDOT expenditures in that year. So those are kind of skewing those numbers, but it just gives you an idea of where you spend your money. So for 2022, public safety is 23% of your total expenditures, education is 13%, and public works is 13%. Over on page 10, these are your proprietary funds. Proprietary funds are the water, sewer, and solid waste funds. This schedule, I don't really care for this schedule. I need to simplify it a little bit. It's a little confusing. But I'll go down to the bottom, just skip to the bottom and look at net position. Net position is invested in capital assets. You can see that it looks like your ending net position for these proprietary funds is $11.7 million. Sounds like a lot of money that are in the water and sewer funds, but actually a lot of that is made up of assets, your capital assets. Capital assets account for just about all of that. In the water and sewer, you have $10.9 million in capital assets, $854,000 in the solid waste fund. The solid waste fund unrestricted is a negative $4.7 million, and what's driving that number to be so negative is the landfill closure, post-closure liability. It's about $5 or $6 million. So that's why that number goes negative. Without that number, it would be a positive number. Water and sewer unrestricted looks healthy at a little over $4 million. And again, this is just a summary of the water, sewer, and solid waste fund. Those are proprietary funds. Their books are kept on a full accrual basis, similar to any other business. Over on page 11, I provide this summary each year. We have a couple new categories. Talk about pronouncement number 87. You can see that there's a lease liability for 2022 that's dealing with GASB 87, that $166,779 liability there. That bond anticipation was replaced with permanent financing for the emergency road repair that you had to do. Your other liabilities, so your total interest-bearing debt for the city is about $23.9 million. You have other liabilities, other long-term liabilities, including a net pension liability, OPEB liability, and compensated absences. These are all estimates based on numbers that are given to us from actuaries. We include those in your financial statement. A lot of these numbers are just GASB going way too far, in my opinion, but anyway, that's subject for another day. They've made these financial statements so complicated. Unless you're working in it year-round like I am, it's nearly impossible to understand. Let's see, enterprise debt, which would include water and sewer, total interest-bearing debt of $14.4 million. Other long-term liabilities, they get some of those other those net pension liabilities, and OPEB liabilities. Total debt there is about 20.7. The school board ended up with some liabilities, even though those will be sent off to the new district after. Since that's a July 1 date that they became a new district, we're still showing them on the city's books, but they will be gone next year. I will point out that you'll notice that the net pension liability for the city went from $4.3 million down to 1.6. You might ask, well, what did we pay off that we reduced our liability? Those numbers are measured as of the previous year, not to complicate things, but they're measured a year prior to the year that we're in. So those are measured as of June 30th, 2021. And at the time, the stock market and investments were doing very well. So the investments were higher, which decreased those liabilities. I suspect next year they'll probably come back up. Total debt for the city, $54.4 million, population of 57. I used a number that's included on the state's comparative cost report. You know, that number's probably pretty close, but I use what they show just so we have comparable numbers. Total debt per capita is about $9,500, $9,482. And of course, that's down from $11,411 the previous year because of those net pension liabilities decreasing so much, mostly due to that. Any questions about the debt? Okay. The last little piece here are GASB pronouncements that are coming up in future years. Part of our job is not only to tell you what you've already adopted, but what's coming down the pike. Just so that you're aware of it, so we don't surprise you. Next year, we have conduit debt obligations. Prior to the adoption of this, it's kind of how you handle those kind of obligations. You could go one or two different ways, and who actually showed the debt on the books. Well, this new pronouncement will clarify that. I don't think that'll have a huge impact for the city of Covington. There's some other ones here that you can read about if you're really desperate to read, or maybe you just like to read anything. Dictionaries, it's probably comfortable to read a dictionary. Over on page 15 will be the next significant GASB pronouncement, number 96. It's subscription-based information technology arrangements. Sounds wonderful, doesn't it? It's similar to GASB 87. It'll follow the same guidelines, except it's dealing with what it says. It's subscription-based information technology arrangements. So if you've got a 5-year information technology arrangement, you'll have to set up a lease similar to what we did for GASB 87. And that one may be worse than this one. A lot of the school boards didn't have a whole lot of leases. Thank goodness for the adoption of GASB 87, but I suspect they probably have a lot of these sabitas, as we're referring to it. We like to abbreviate everything in accounting. GASB and sabitas. It never ends. But anyway, I suspect the school boards will have a hard time, a little bit more of a hard time once we adopt that one. That one's not. That one is effective for fiscal years beginning after June 15th, 2022. So then you have to go into calculation there and you got to figure out, well, 2022, so that's fiscal year 2023. because the fiscal year end starts July 1, 2022. So the beginning after, that's confusing. That's fiscal year, beginning after, yeah, it'd be fiscal year 23. So that one's this year. I think that's all I had to say. Sorry, I ran on. I get excited talking about this one. Not really. If you have any questions, I'll be happy to try to answer your questions.
Have any questions?
It is what it is.
They are some very difficult financial statements. The people at GASB, Government Accounting Standards Board, is not making this easy. And at some point, somebody's got to get in their ear and say, "I need to chill out on this stuff." It's got crazy. The 87 that we adopted this year, there's a lot of things that made that one very difficult to adopt. Not to mention the time it took city staff to come up with the stuff and give it to us. We have to look at every lease agreement and see if it applies under GASB 87. It's not good. Questions?
Thanks for your time.
Well, thank you. Thanks, and again, thanks for having this meeting. I appreciate it.
Yes.
You know, just about everybody has their meeting on the second Tuesday of the month in the afternoon, in the evening. And I can't be in Washington County and Covington at the same time. So thank you for having this meeting. Let me come today.
No problem.
Merry Christmas and Happy New Year.